So a few years back was investing more into individual stocks than my ETFs. So some of my individual stocks are still outweighing my VTI or VOO, especially Apple. I had got my when I was starting to evaluate that situation and wanting to add more ETFs into my portfolio, my Apple position was over 50% of what I was holding in my portfolio over on Webull. So yes, I've gotten it down. I've gotten it. It's below 50%, but it's still significant.
Wow, 50%. You was going hard. I said
You
50%,
never
you was going hard.
You must have forgot because I've said this so many times.
I didn't know it was that
But
much. I knew you had a lot of it, but I didn't know it
yeah,
was that much.
no, but yeah, and you know something? And I had actually taken a break. I shouldn't have because my I also fell into a different something else that we talk about sometimes where you don't want to mess up your average. My average was $120, I remember, and I took a long break from investing into Apple because I didn't want to mess up my average, but I should have continued investing. But at the same time, I'm not going to beat myself up about it because it gave me a time to focus on my Amazon and Google and other things that are also doing well, doing better than my Apple in my portfolio. So maybe I needed that break, but I should have at least kept a small amount going into Apple because that keeping your average, you can't be holding on to that when you could have when your say Nvidia average is $400 and you're like, oh yeah, I'm not going to mess it up. If that's what you're thinking, it's not messing anything up. We just have to keep going forward, whether it's an individual stock or ETFs, because what's going to, on certain things, we can't just be blindly or, certain things that and you believe in for the long term. Yes. Don't be holding on to, I have a good average.
Yeah, the
Just
average that
know,
average will hold you back. Trying to save your low cost average will
yes,
hold you back. You could
make your
potentially miss out on an accumulation period in the market to where as though it then fell a little bit and now it's trading sideways. That's the time for you to start accumulating. It's found
mhm.
support. It's found a nice support level, and it pretty much doesn't have any room to go any lower. And you're so worried about your average, and then you get some good economic data. Jerome Powell decides he wants to cut interest rates, and you see the market go to the moon, and you're like, "Wow, I wish I would have bought more." So yeah, to the viewers out there in the chat, don't worry about that cost average. Just simply, if you're dollar cost average, and just simply continue to stay the course, dollar cost average, to whether the price is up or down, and you'll be all right. Think 10, 15, 20 years down the road, if you look at an actual chart of any of these individual companies or the S&P index as a whole, it has done nothing but gone up throughout time. So ain't no way, and you know what, you're going to be able to keep that average the same unless you want to keep that same small position or keep that same position
I
size.
mean, yeah, it is the market. You will have some down times, but when it comes to the total US market is going to recover. So yeah, about this average. Yeah, yeah. Just
Yeah,
focus
I've been bitten
on
by
how,
saving the price average too. I'm guilty
yeah.
too.
So yeah, I know sometimes I stop and share at a certain point. Like when I got to recently, I had gotten to 20 shares of VTI in one portfolio. So I don't have a set goal on how many shares of something that I want to have. I'll just stop and I might say, this is a good point to share. I'm at 500 days or I'm at this many shares, but I think you should set goals like that for yourself, whether it's a dollar amount or a share size goal. Just create goals like that on those long-term holds and just keep plugging away at it and just stay focused and consistent with your investing.